Hello students, in our previous lecture we are solve a practical problem on conversion of single entry into double entry system. Problem number 4, the preparation of trading profit and loss and balance sheet. Okay, in our today's lecture we are going to solve a practical problem on conversion of single entry into double entry system. Okay, so practical problem number 5th. Mr. Raj, who maintains his books on single entry, supplies you following information. Prepare a trading and profit and loss account for the year ending 31st March 2020. B. Balance sheet as on 31st March 2020. First point, assets and liabilities given to you. So here particulars, second column 1st April 2019 rupees, third column 31st March 2020 rupees. So here the opening and closing balances of creditors, debtors, stock and machinery is given to you. Okay, so in first column particular, second column opening balances. 1st April means these all are opening balances, opening balance, and 31st March is closing balance. Okay, so these are the closing balance, closing balance. Okay, so these are the closing balance. Now we read the particulars. Trade creditors opening balance 25,000, closing balance 27,000. Opening balance transferred to opening balance sheet, closing balance transferred to closing balance sheet. Liability side. Trade debtors opening balance transferred to opening balance sheet or opening statement of affairs asset side, and closing balance of trade debtors is transferred to closing balance sheet asset side. Okay, so we write it in front of this amount transferred to liability side, opening balance sheet, OPBS, opening balance sheet, opening balance sheet. Got it? So the opening trade creditors transferred to liability side, opening balance sheet, and the trade creditors of closing balance. Okay, so closing balance is transferred to liability side, closing balance sheet, BS means balance sheet. Got it? Then trade debtors transferred to asset side, opening balance sheet. Okay, opening balance sheet. Trade debtors asset side, which balance sheet? Closing balance sheet. Asset side, closing balance sheet. Okay. Stock opening stock here. Opening stock has four effect, stock has four effect in single entries conversion of double entry. When we converting the double entry, the stock has four effect. Opening stock, first effect, transfer to opening statement of affairs as well as transfer to trading account debit side. Closing stock transfer to closing balance sheet asset sides, and Second effect is on trading account credit side. So remember that stock has always four effect: opening stock, trading account debit side, first item, and also transfer to opening balance sheet asset side, and closing stock. Closing stock is transferred to closing balance sheet asset side as well as trading account credit side. So here we write it into bracket. First effect, that is asset side, asset side asset side of opening BS, okay, balance sheet. And second effect on trading account debit side. Got it? Yes, sir. Okay. So stock has four effect: opening stock two effect, closing stock two effect. Okay, two to four. Okay, first effect asset side opening balance sheet, second effect trading account debit side. So closing stock first effect, here. First effect asset side closing closing BS balance sheet, and second effect trading account credit side. Okay, credit side. Got it? Yes, sir, got it. So here we first of all transfer or note down the items transfer to respective accounts, then we easily transfer these uh, amounts or items to that respective accounts. Okay, so here machinery amounted to rupees 1,55,000. Okay, so machinery opening balance of machinery 1,55,000 and closing balance is also 1,55,000, so no change. So opening balance of machinery is transferred to asset side, opening balance asset side, but which opening balance sheet? Opening BS. Here asset side opening balance sheet, and closing balance of machinery is transferred to asset side closing balance sheet. Okay, so we transfer this item to respective account in our solution. Then second part, receipt and payments during the year. Okay, so here the income or the receipts from and payments to respective parties is given during the year. So here opening balance, okay, bank balance. So bank balance on 1st April 2019. So bank balance 1st April 2019, it is called opening bank balance or cash balance. So bank balance is also our assets. Okay, so the assets, opening asset is transferred to opening balance sheet, so write it here. So asset side opening balance sheet. Okay, so we transfer a bank balance to asset side of opening balance sheet. Okay, 1st April 2019, it means the balance on opening balance of cash or bank is our opening asset transferred to opening statement of affairs, rupees 7,000. Cash sales means sales is transferred to or posted to posted to trading account credit side. Okay, trading account credit side. Got it? Cash from debtors. So cash from debtors, one effect on the cash book. Okay, to cash from debtors, it means cash received from debtors, and second effect is also given to debtors account, so that the amount of closing and opening is given, and credit purchase and sales is given. So here it is ignored. Why it is ignored? Because the effect is given to debtors account. Okay, then then payment side, payments to creditors, it means cash goes out from the business, and one effect is given to cash book credit side, payment to creditors 5,10,000, and second effect is also given to creditors account. Okay, to cash account. Okay, on the debit side of creditors. So it is also ignored, because here closing balance of debtors and creditors is given, as well as credit sale and credit purchase is given. So no need to prepare a working note to find out a closing balance or credit sales of the uh, organization. Okay, so here it is ignored. Then wages. Wages is our expenses. Wages is our expenses, and expenses, so this wages is direct expenses transferred to or posted to trading account debit side. So here the wages is posted to, posting of wages to trading account debit side. Okay, trading account debit side. Okay, got it? Trading account debit side 80,000. Then insurance is non-operating or operating expenses or direct expenses. So insurance is operating expenses. Okay, so transfer to or posted to P&L account, P and P&L account debit side. Okay, P&L debit side, P&L account debit side, P&L profit and loss account debit side. Then rent is operating expenses, not direct expenses. Okay, so it is also transferred to profit and loss account debit side. Sundry expenses is also transferred to profit and loss account debit side. Drawing is less from or deducted from, drawing is deducted from capital. Okay, here less from capital. Okay, got it? So drawing is deducted from capital, and the closing balance of cash is given here. So closing balance of cash means closing cash or bank balance is our asset, and it is transferred to asset side of closing balance sheet, asset side closing balance sheet. Got it? Yes sir. Amounted to rupees 20,000. Okay, now we are read the adjustment carefully. So here adjustment, discount to debtors rupees 9,000 and discount received from creditors rupees 19,000. Okay, so discount to debtors, so discount is our loss, so the discount is posted to, so the discount is posted to P and L account, P and L account debit side. Okay, and the discount received is our gain. Okay, discount to debtor, it means discount allowed to debtors, so discount allowed, so discount allowed is our loss, and loss is also posted on the debit side of profit and loss account, and discount received is our gain, and gain is posted on credit side of profit and loss account. Okay, P and L account, P and L account credit side. Got it? So remember this, and one effect is given to debtors account, that is on the credit side discount into bracket allowed rupees 9,000, and one effect of discount received is on creditors account to discount into bracket received 19,000, but the discount is our loss, loss is also shown on the debit side of profit and loss account, and discount received is our gain, and this gain is also shown on the credit side of profit and loss account. Next, credit sales. Credit sales is add in, credit sales is add in cash sales, add in, add in cash sales. Okay, cash sales, and credit purchase is add in cash purchase, but here in cash book there is no any cash purchase given, so the credit purchase is directly posted to, credit purchase is directly posted to trading account, trading account debit side. Okay, debit side. Got it? Got it? Okay, yes sir, we got it. Now solve this problem. Okay sir, yes sir. So here solution, 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 solution in the books of Mr. Raj, trading and profit and loss account for the year ending 31st March 2020. Okay, so here prepare a ledger accounts of profit and loss account and trading account. No need to make a separate trading and profit and loss account. Okay, we prepare both account in one statement. Here insert particulars rupees, particulars rupees, debit credit, debit, debit, and credit, debit credit. Debit credit. Here in our problem, the capital is missing. Okay, so here we read problem carefully, but capital is not given in the problem, so we have to prepare a working note for finding out a opening capital of Mr. Raj. Okay, only one working note is here to find out a opening capital. It is very easy. We prepare opening statement of affairs, and the difference on liability side is called opening capital of the Mr. Raj, and that opening capital is posted to the closing balance sheet liability side. Okay, got it? Yes sir, got it. So here then we prepare a closing balance sheet. Okay, balance sheet as on 31st 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 March 2020. Okay, then we prepare a working note. Working note. Finding out opening capital. How to find? So we need to prepare a opening statement of affairs. Opening statement of affairs, that is called opening balance sheet. Opening balance sheet as on 1st April 2019. Okay, so here debit side, particulars rupees, particulars rupees, then liabilities rupees, liabilities rupees, assets rupees. Here also liabilities rupees, assets rupees. Okay, now we prepare a three statement, that is profit and loss trading account, profit and loss account, and closing balance sheet, and one working note to find out the opening capital of the organization. Okay, so first of all transfer the respective items to respective accounts. Okay, so here read problem. Okay, so here in first liability and assets is given. So trade creditors, so trade creditor is transferred to liability side on opening balance sheet. So here we empty the two lines of top, because we write it on the top a capital. Okay, so here trade creditors, okay, on 1st April. Okay, so here 1st April 2019 only amount of 2019 will be posted on opening balance sheet. So 25,000. So 25,000 is posted to opening balance sheet. 25,000. Then second, closing balance. Okay, so here closing balance is also given. Okay, closing balance of creditors is also given, so we easily transfer it. Closing balance of creditors is transferred to the closing balance sheet. Okay, on second line. Okay, so here trade creditors amounted to rupees trade creditors amounted to rupees 75,000. Okay, 75,000. How much? Not 75,000, 27,000, sorry, 27,000. Okay, then read the second item, that is trade debtors opening balance posted to opening balance sheet asset side. Okay, so here trade debtors trade debtors amounted to rupees 48,000. Okay, 48,000. We transfer a opening balance to opening assets. Now closing balance is transferred to closing balance sheet. Okay, so here closing balance is 55,000 transferred to closing balance sheet asset side. Okay, so here trade debtors 55,000. Okay, then stock. So while reading the problem, we can say that the stock has always four effects. Opening stock, first effect, asset side of opening balance sheet and trading account debit side, and closing stock, first effect on asset side of closing balance sheet and second is trading account credit side. So stock, first of all, transfer opening balance of stock. So opening balance of stock is transferred to opening balance sheet asset side. Stock into bracket opening. Okay, opening stock amounted to rupees 64,000. Amounted to rupees 64,000. Okay, then second effect is on trading account debit side. To opening stock amounted to rupees 64,000. Now we transfer a closing balance of stock. So closing balance of stock is 73,000. Okay, so 73,000 is transferred to closing balance sheet and trading account. Okay, so here stock into bracket closing and amounted to rupees 73,000. Okay, 73,000. Then machinery, opening balance of machinery transfer to opening assets. So here machinery. So we go through the sequence. First of all, fixed assets. So fixed assets on top, write it the top level. Machinery amounted to rupees 1,55,000. Okay, then closing machinery, same amount 55,000, transfer to closing balance sheet. On top, fixed assets, then current assets. Okay, so first, machinery amounted to rupees 1,55,000. Got it? Okay sir, yes sir. So we transfer all the opening and closing balances to respective accounts. Means opening balance transfer to opening assets and closing balance transfer to closing balance sheet. Okay, then we transfer the receipt and payment account to respective accounts. So bank balance, here bank balance, opening bank balance 7,000, it is a current asset, transfer to opening balance sheet. Bank balance on 1st April 2019 amounted to rupees 7,000. Okay, amounted to rupees 7,000. Okay, then read one by one. Bank balance is transferred, okay, to opening balance sheet. Then cash sales is posted to trading account credit side. Here trading account credit side by sales into bracket or in next line, cash sales, write down the amount in inner column, that is amounted to rupees 4,90,000. 4,90,000. Okay, so we transfer the cash sales to trading account credit side. Then cash from debtor, so we ignore it because effect is always given to that respective accounts. Now we read a payment side and transfer a account, so transfer items. So payment to creditors ignored because the effect is always given to creditors account and cash account. Wages is direct expenses, transfer to the trading account debit side. To wages, we empty one line because in empty line we write it here the purchases. Okay, we go through the sequence of the items. Okay, opening stock, then purchases, less purchase return, then wages, then then direct expenses, other direct expenses. Okay, so wages amounted to rupees 80,000. Okay, then 80,000 transferred. Then insurance is transferred to debit side of profit and loss account. So here to insurance amounted to rupees 7,500. Then we posted the insurance to profit and loss account debit side. Then rent is our expenses is posted to debit side of profit and loss account. Okay, so rent amounted to rupees 22,500. Then sundry expenses is given. Sundry expenses is also our expenses. Okay, so 38,000 is sundry expenses. So sundry expenses is transferred to profit and loss account debit side. 38,000. Then okay, so here we transfer all the expenses to respective accounts. Wages direct expenses transfer to trading account. Insurance, rent, sundry expenses are the operating expenses and it is transferred to profit and loss account debit side. Drawing is less from capital, but capital is missing. So first of all find out the capital, then we deduct the drawing from capital. Here closing balance of bank or bank balance closing. So closing cash balance or bank balance is our closing asset. So transfer to closing balance sheet, that is bank balance on 31st March 2020 amounted to rupees 20,000. Okay, got it? Yes sir. So we transfer each and every item. Now we solve the adjustment or transfer the adjustment. So discount to debtors, discount is our loss transfer to profit and loss account debit side. To discount allowed, rupees 9,000, and discount received is our gain by discount into bracket received amounted to rupees 19,000. Okay, so we posted the first adjustment. Okay, then we post a second adjustment, that is credit sales and credit purchases. So credit sales is add in cash sales, add, I think stock effect is remaining, credit sale amounted to rupees 2,59,000. Okay, so make the total of sales, and the amount of total sale is 7,49,000. Okay, 49,000. Then closing stock is transferred here, but second effect is not given. Okay, so second effect is not given, so second effect is always on the credit side of trading account by stock into bracket or by closing stock, closing stock amounted to rupees 73,000. Okay, now we make or close the opening statement of affairs. So make the total of opening statement of affairs. Here asset side is more than the liability side. Okay, asset side is more than the liability side. So total is So the total is 2,74,000. 2,74,000. Total of asset is 2,74,000. Put this total on liability side. 2,74,000. Put this total on liability side. 2,74,000, and the difference is 2,49,000. Okay, and that difference is called capital into bracket balancing figure. Okay, and the difference is called capital or opening capital, and this opening capital is transferred to closing balance sheet liability side. Okay, so capital is transferred to here, capital inner column 2,49,000. Okay, then find out if additional capital is given. So in our problem additional capital is not given. Okay, so direct we deduct the drawings from less, deduct drawing from capital, that is drawings amounted to rupees 62,000. Okay, and the total is in inner column. Total is in inner column amounted to rupees 2,49,000 minus 62,000 amounted to rupees how much? 1,87,000. 1,87,000. Okay, now we close a trading account. Okay, we transfer all items related to trading account, but here purchases is not posted on trading account, so post that purchases to trading account. Here to purchases amounted to rupees 5,31,000. 5,31,000. Okay, 5,31,000. So here credit side of trading account is more, so close the trading account first, then profit and loss account. So here total of credit side is more than the debit side, and the amount is 8,22,000. 8,22,000. Put this total on debit side, 8,22,000, and find the difference, and that difference is called, and the difference is 1,47,000. 47,000. and that difference is called to gross profit. To gross profit carried down, and this gross profit is brought down in profit and loss account. Okay, so this gross profit is transferred on the credit side by gross profit brought down amounted to rupees 1,47,000. Okay, so here 1,47,000. So make the total of profit and loss account. So here credit side of profit and loss account is more, so make the total of credit side here. Total is 1,66,000. Total is credit side total is 1,66,000. So put this total on debit side. Find out the gross or net profit. Sorry, in profit and loss account we earn a net profit. So total is 1,66,000. Put this total on debit side, 1,66,000, and the difference is 89,000. Okay, so 89,000 is difference, and that difference is called to net profit into bracket transferred to capital. Okay, transfer to capital. So this is the balancing figure. Okay, it is balancing figure. Which figure? It is balancing figure. Okay, balancing into bracket balancing figure. Got it? Okay, so the net profit is transferred to capital. It means net profit is add in net profit is add in capital, and net loss is deduct from capital. So net profit okay, net profit. So NP short form is NP, net profit add net loss deduct or reduced from capital. 89,000, and the total is make a total, and total is 1,76,000. Sorry, 2,76,000. Sorry, 2,76,000. 2,76,000. Okay, now make the total of both the sides. If both the sides are equal, then our solution is correct. Okay, If both the sides are equal, then our solution is correct. So here make a total 2,76,000 plus 27,000, 3,03,000. Okay, 3,03,000 is the total of liability side. Now we make a total of asset side, 1,55,000 plus 55,000 plus 73,000 plus 20,000. Okay, so both the sides are equal. Okay, the total of liability side is 3,03,000 and total of asset sides is 3,03,000. It means our solution is correct. Okay, solution is correct, that is amounted to rupees 3,03,000. 3,03,000. Okay, 3 lakh 3,03,000. Okay, so our total is correct. Liability side is equal to asset side. It means our solution is correct. So revise this problem again, solve this problem in your notebook. Okay, in our next lecture we solve another practical problem on conversion of single entry into double entry system, and we prepare a working note also. Okay, so here we stop the lectures. Thank you very much.